I think let's invite another guest now into onto the discussion, and this is markets now. Mehrab Irani is with Tata Investment Corporation, manages a large corpus of funds. Mehrab, thanks very much. Good to have you with us here. Thanks for your time. Are we entering a bit of a sort of confusing kind of area for the market? Because the market was moved up substantially even as oil was moving up, yields were moving up. Traditionally the relationship between some of these variables and stock markets is inverse. But when we moved up along with everything else also moving up, oil of course being the most important variable for India. Now as those things start to reverse, what is the reaction here going to be?
Yeah, good morning Prashant, thanks for calling me. If you see a few weeks back I was on your channel, and at that time I had said that the valuations currently are at least 10 to 15% premium to long-term averages, and the delta which the earnings expectation which analysts were having almost 18-20% growth was mainly coming from certain PSU and corporate banks and also from global cyclicals like oil, metals, etc. If you see the events which have happened over the last few weeks, I think clearly the growth in the PSU and corporate banks will still be little bit eluded. I think the NPA cycle is not behind us, and I think still we have to watch at least for next 1 or 2 quarters how this pans out. Also the global cyclicals have been very volatile, as you said. Oil prices have also gone up. The US has announced some trade barriers, etc., which is not helping. So I think now the earnings expectation is around 14 to 15% going forward, on which basis I think we are valued at close to 18 times forward earnings, which is again at a 10% or 12% premium to long-term cyclical average. Even on a price to book value 2.6 times with ROE at 14%, which is 100% discount to the long-term average, is slightly costly. If you see interest rates, as you said, have also gone up. Today if you see bond yield minus the earnings yield of the Sensex, it's almost 175 basis point, which is also quite high. Market cap to GDP at 90% is also higher than cyclical valuations. So yes, clearly those headwinds are there. Also inflation has been recently rising, and RBI has clearly said that they will target inflation. So that is another factor. Yes, certain positives are there, that the GDP expectation has improved, the monsoon is expected to be good, etc. That positives are there, but yes, there are a lot of headwinds which you have to tackle. Also one more thing, the global, if you see the US 10-year treasury yesterday touched 3%, which is after many years it has touched 3%. The fiscal deficit over there is almost $700 billion, and economists over there are predicting that it will touch $1 trillion over the next 1.5-2 years. So if US treasuries were to rise, that will be a big negative for flows into emerging markets over the medium to long term. So that is another factor I think which we have to watch.
Okay, Mehrab, we need to take a mandatory break, so we're going to do exactly that. We're going to take a quick short break and come back and continue our conversation with Mehrab Irani. Welcome back. Well, Mehrab Irani of Tata Investment Corp is still with us. Mehrab, we were just discussing earnings in the break. So I wanted your thoughts in terms of how earnings have fared according to you, and what has stood out according to you, and what would make you a little more overweight from incremental levels just based on what they've reported.
Yeah, if you see private bank earnings have still been good. Private bank, NBFCs, that space is still good. No doubt there is some little slight increase in NPA in certain banks, but otherwise the earnings continue to be very good in that sector. The margins are good. Though the valuations are very costly, but I think I will still remain positive in that. A lot of the IT sector which reported numbers, I think some large cap numbers were really very good, and the commentary which the management is giving is also very positive. And in the mid cap IT space also, particularly in the product companies, etc., I think there is a lot of scope, and we have to watch that space also. Another sector which we have to watch, I think, is the consumer sector, the FMCG sector, that has been doing good. If you see few quarters back, the story was that the gross margins were expanding because the input prices are coming down, but now over the past 1 or 2 quarters, volume growth has started coming back in that sector, and with volume growth and the margins remaining stable, I think that is still positive. Although they are most of the companies in the consumer space are trading at 20 to 30% premium to long-term averages, but still I think they remain good. Another sector I would be positive would be the auto sector. I think the auto numbers continue to be very good, whether it's two-wheelers, scooters, whether it is passenger vehicles, etc., are very good. Again, valuations over there are certainly not cheap. Most of them are trading at 20% plus premium to their own cyclical valuations, but still the growth and the numbers are coming, margins are stable. I think will continue to remain positive in that sector as well.
One sector which is talked about for the last month or so, month and a half or so, is media. Do you own stocks there? I mean, could be radio companies, television companies.
We do own some in the media and entertainment space, and yes, it is a very small segment. But
it's small, yes.
Yeah, but the opportunity, I think, is quite there in certain pockets of that segment. I think the consumerism is still going on, and that will, I think, help even certain entertainment, media, and those kind of businesses. And I think I would certainly be positive, though it's a small space, but we are positive on that space, and we do own
political elections.
Yeah, that is another reason. But I am not very sure about the print media, though this year, because they have been facing their own problems. But as you mentioned, certain other businesses like radio, I think it's still an emerging business. And if you see the radio growth in India, it is second. Internet is highest at around 30%, and the radio volume growth is almost 17% plus. So that business still looks good, and the phase 3 auctions, etc., over there are already over. The capex is over. The margins, EBITDA margin in that business around 35%. So that business still looks good, and over the medium term should have potential.
Okay, Mehrab, we don't have much time left, so a quick answer from you about the rupee, which is at a 14-month low. Are you worried that that could impact sentiment?
Yeah, rupee at a 14-month low is obviously a worrying factor, but that has actually, in the other way, it has helped the IT sector, and today if you see, the IT stocks are doing very well on that basis. But yes, we have to see what happens on the manufacturing, etc.
Okay. All right, Mehrab, we're going to wrap up the conversation now. Thank you very much for joining in and speaking with us. So that is Mehrab Irani talking to us on the fundamentals of the market. Well, for the Nifty, we're a bit sluggish right now, down around 0.25%, and it's a wrap on trading hours. Stay tuned. Halftime report is up next.